Good morning, everyone. This is Charalambos Pissouros, Senior Analyst at IronFX Global, bringing you the morning comment for the 3rd of March. Asian stocks extend their gains. Most Asian stock markets closed up today for the 3rd consecutive session, as rising oil prices and signs of improvement in the US economy seem to have eased concerns of a global downturn, at least temporarily. The risk appetite was revived following the People's Bank of China's move to cut bank's reserve requirement ratio on Monday, and after several oil companies announced a cut or a freeze of their production output. We believe that the risk-on sentiment could remain elevated for a while and may continue supporting pro-risk currencies such as Aussie and New Zealand dollar. At the same time, this might lessen demand for safe havens like yen, the Swiss franc, and gold. In our view, rising confidence could also spill over into the European equity markets, where we may see indices such as DAX and Euro stocks adding to their recent gains. Yesterday in the US, the Fed's Beige Book revealed a mixed outlook of the US economy for the first 2 months of the year. Most districts reported that economic activity expanded and that spending rose. Wage growth varied from flat to strong, but the manufacturing sector continued to struggle. The FOMC gathers in 2 weeks to decide on interest rates, where it is widely expected that officials will remain on hold in order to assess any impact on the economy from the recent global volatility. Even though the Beige Book is likely to be one of the key pieces of information that the committee members will be working with to evaluate that impact, it offers little evidence to warrant a rate hike in the near term. Nevertheless, the report did not show that the US economy was strongly affected by the negative sentiment over the past 2 months, something that keeps alive the possibility for more than one rate hikes during the year. As for today's indicators, we get the final service sector PMIs for February from the countries we got the manufacturing data on Tuesday. The final forecasts for France, Germany and Eurozone are the same as the initial estimates, so we do not expect any major reaction from Europe. Eurozone's retail sales for January are forecast to have slowed from the previous month. In the UK, the service sector PMI for February is forecast to have declined from the previous month. Bearing in mind that the manufacturing and construction PMIs both disappointed, any softness in the service sector could add fuel to concerns that the British economic activity is losing momentum. As a result, this may bring the pound under renewed selling pressure. From the US, we get the ISM non-manufacturing PMI and the final Markit service sector PMI for both for February. While the preliminary print for the Markit index slipped to contraction territory, there is no forecast available for the final release. In any case, the market generally pays more attention to the ISM index, which is expected to have declined somewhat, but to remain safely within the expansionary territory. Factory orders are forecast to have risen in January after falling in the previous 2 months. Industrial output also accelerated during the month, which supports the forecast. The final unit labor costs index for the 4th quarter is also coming out. While this is usually not a major market mover, heading into the March FOMC meeting, it might attract some extra attention given the Fed's emphasis on the labor market. Initial jobless claims for the week ended on the 26th of February are expected to have decreased a bit, which would bring the 4th week moving average down as well. Net-net, we expect that just 1 day ahead of the US employment report, investors may focus primarily on the employment data, which could add more steam to the greenback's recent recovery. We have one speaker scheduled on today's agenda, Dallas Fed President Robert Kaplan. For more information, including technical analysis, please read the full comment on ironfx.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX Global, Wishing you solid trading.